Thank you, Amy. Thank you so much. Thank you all for being here. And Amy, Pat, the entire Bitwave team, thank you so much for such a great event. I just want to say it's really always fun. My third EDAS. I want a badge next time. So as Amy mentioned, it's good to see you all. My name is Quaranta. I have the privilege of chairing the Wall Street Blockchain Alliance. I want to give my amazing panelists an opportunity to say hello. Let's start with you, Sean.
Yeah, so again, Sean Prince, partner at Crowe LLP. I'm in our national office. I sit on the AICPA's Digital Assets Working Group from an accounting perspective. I think someone mentioned the practice aid earlier, but yeah, we spend a lot of time trying to think through how can we give the best guidance possible to help practitioners, preparers know how to think through the financial reporting aspects. But I'm just going to, fun fact, and then I'll let Mary introduce herself. So Mary and I, we met each other at a conference, what was it?
November 2022.
November 2022. And why does she remember that? Because at the end of we were doing a panel, and at the end of the panel I said, okay, let's go around, guys, get the crystal ball out. What do we think is going to happen in the world of crypto in the next 6 months, or something to that effect? And I think Mary was saying something about NFT explosion or whatnot. And then
Ta-da! The next day.
The very next day, FTX. So that's me. Mary, go ahead.
There you go. So we look forward to seeing what implodes later this week.
Please stop leading off with that, please.
Hi, I'm Mary Kauffmann. I'm the VP of Finance at Lightspark. So we are building software services and infrastructure for enterprises, financial institutions, neobanks, exchanges, marketplaces, et cetera, to access the Lightning Network. So incredibly exciting. Austin from Vidge is going to do a lightning talk just after this. So if some of the things that I'm talking about are a little confusing, just wait 20 minutes and they will all be crystal clear. And I've had a little bit of a varied crypto journey myself. So I spent the first 10, 11 years at the Big Four in public accounting. And then I joined Facebook right when we were starting the Libra project, so which was an independent association building a stable coin with the backing of Facebook, who was building Calibra, the wallet. So I kind of lived in stablecoin world for a while until we faced a lot of regulatory scrutiny and folded up that project. And I moved on to the Wild West of NFTs, where I was the head of technical accounting and reporting at OpenSea, the NFT marketplace, where I worked with Steven, who was on an earlier panel. We kind of Bonnie and Clyded our way through the last crypto summer and winter. And then got to rejoin a lot of the founding team from the Libra project at Lightspark. So I've kind of come full circle, so we're excited to be here.
Sean, Mary, good to see you both. Let me start off by mentioning that only in our world can every single panel, no matter the topic, have to deal with regulations. So let me, Sean, let's start with you. We've talked about this and we did some prep. Let's stitch together what we've heard. When we look at the landscape for financial reporting, we've got GAAP, we've got FASB, we've got the ASU, everyone's raised. What have you seen in that evolution? How do we stitch together the story of what regulation is looking like for the accounting practitioner?
Yeah, before I answer that question, I'd say that we could probably answer a lot of the questions that Ron's going to ask us with ditto, right? Repeat what's been said, drop, and be done, because a lot of people have discussed what we had intended to discuss. So to Ron's point, I'll try to just kind of tie it all together, right? We've talked about back in the day when it was the Wild West and we were under a lower of cost or fair value model, right? For a lot of crypto assets, at least holdings of crypto assets. But we've always struggled a little bit as crypto native companies to figure out, how do I account for this stuff, right? When I'm paying somebody in crypto, how do I account for that stuff? And we had a pretty good presentation earlier today about some of the nuances, one of which being those embedded derivatives. So the accountants have had to really kind of cobble together, how are we going to do this? Whether maybe it's an intangible asset, so we use a lower of cost or fair value model. But if we're a crypto native company, then we have to apply the RevRec model and try to figure that out. So there's still a little bit of that going on. But now, as everyone's mentioned today, we have ASU 2023-08, which gives us better clarity on which subset of crypto assets should be accounted for at fair value. An earlier session told us, though, that that was not a catch-all, right? There are plenty of crypto assets out there still that are not in the scope of that, right? NFTs to name one, maybe certain wrap tokens to name others, liquidity tokens and whatnot might not be within the scope of that standard, which leaves us in this weird world where we have dual kind of recognition measurement models, which I think we get paid, what, $10 for every time we say Bitwave might be able to help out with, right? If you use
You're only
Bitwave.
getting 10? I'm a little concerned.
Oh no, my contract's too low. And then again, we've talked about SAB 121. I thought it was pretty cool to see Bitwave's demo of that reporting functionality earlier, but we've seen people hate that and try to get rid of it and still hate it when it wasn't gotten rid of. So there's a lot of regulatory issues that companies need to be aware of. And I think later on, Ron, we'll probably talk about, well, from an organization perspective, how do I get ready? Like, how do I become aware of all of these things, especially when I'm discussing it with my auditor, right?
Right. No, Mary, please, go ahead.
I would say two others I'm thinking about is issuer tokens. So issuer tokens are outside of scope, but once they start to be actively traded and there's an active market, at what point are they sufficiently decentralized such that they may be in scope? And so, do you have this switch period? So I completely respect the FASB wanting to get to some achievable gap so that we could get something out before the industry completely changes over. But it'll be exciting to see where we go from there. And then, of course, we have the broker reporting rules coming out from the IRS with something like 40,000 comment letters coming through, and then getting the final iteration of that within the last couple weeks. We're waiting on the final Form 1099-DA, but as a enterprise that serves other enterprise that needs to deliver those reports to their end customers, making sure that we have systems in place, making sure that we have the tracking, that we understand the actual regulation so that we can be compliant.
The broker reporting regs, what was that, 400 pages? Something like that? Yeah, thanks,
so.
IRS. Let's you both are bringing us to a point where we talk about one of the things we looked at, the common practice issues that are raised in context of these regulations. Sean, can you dive into those a little bit? You mentioned fair value. We've had a lot of great conversations about this. But what are those practice issues that really need to be in the forefront of people's minds?
Yeah, so I'll start with scope. Just like I mentioned, you need to know which accounting standard applies to your holdings of crypto assets. So I'm going to focus primarily on holdings of crypto assets versus issuances. Issuances are very tricky, right? The Digital Assets Working Group, the accounting subgroup of which I'm a part, we spend a lot of time talking about, now that we have this new rule and we have these new scope criteria to determine whether you're going to be fair value, you're going to stay in the land of cost less impairment, right? What types of tokens qualify? So I think an organization always needs to understand what are my holdings, which accounting guidance am I subject to, and have capabilities to account different models, right? Being able to do that. But there's going to be a lot of scrutiny up front, right out of the gate as we adopt this new standard. And I think, unfortunately, you're going to see different organizations fall in different lines if they don't talk with each other. So if there's anything I'd take as a takeaway from this conversation, especially as it relates to being in the regulatory safe space, is it communicate. Right, I think an earlier panel said find the community, but you really want to have an open communication with the industry players as well as your auditors early and often, so you're not finding yourself at the last minute in a place where you're going to have to make significant changes, right? So scoping is a big one. Quickly on fair value, I think someone earlier mentioned principal markets, right? Fair value is great. We're all happy that we got fair value because we hated just having to go one way. We were in this unidirectional no man's land where everyone had to take the loss but didn't have the benefit of the upside. I'm going to quickly, again, turn into an earlier presentation. I believe it was yesterday, and Mary, you probably can hum a few bars here, where the SEC staff came out and said, hey, you wanted fair value, so you better not be adjusting those non-GAAP measures to reverse out fair value, right? Remember when you were all complaining and you told the FASB you wanted fair value for this stuff? Well, you got it. So don't you dare try to reverse it out when you're doing your normalized EBITDA, because that's inconsistent with GAAP, just the way you wanted it. So again, part of this is just, again, communicating and being aware of everything that's going on. But on the fair value perspective, let me just hum a few bars, okay? The big thing is principal market, right? You're transacting. This is an interesting world, right? We still have a lot of marketplaces in which an organization, an enterprise can transact in crypto assets, right? There's a presumption in GAAP that you can start with the market in which you're transacting. That's kind of the presumption, but that only holds if there's unreliable evidence that there's a better market, right, at which to record that fair value. And so you've got organizations that play in different areas. There's international implications. I can transact in these markets over there in Asia, but I can't transact in these markets over here in the United States. So you've got different values for the same crypto asset in different locations. Right? So do you get to use two principal markets for the same asset or not? Right? Generally, I think I'd say no, but that's the type of conversation you have to have with your financial statement.
Mary, weigh in, please.
Yeah, so we're tying in 3 to 5 other conversations that we've had today, talking about a lot of us practitioners have small finance teams, talking about needing to know what your product and your engineering teams are doing. So we surface a USD pairing. The engineers have coded in what pricing oracle they're going to use. But for accounting, we have to do our own assessment of what is our principal market. So if that's not the same, then we're going to have a difference between what we're showing in one place versus the other. But what's in our UI and what's in our GAAP financial statements may not be the same. So, I just recommend working with your product teams, working with your engineering teams earlier as you're scoping out the build of all of these systems to see if you can, feed 2 birds with one stone and kind of cover several of these things at once.
Mary, Sean, thank you both. I want to rip up the script on us a little bit, and hopefully this makes sense. But let me lay out a scenario, Sean. Mary walks in with a shoebox full of papers, a bunch of Excel spreadsheets, probably a Google Doc someplace, and a whole pile of cold storage wallets. Talk to me about client acceptance. What does that look like?
Audit me.
My banker says I need an auditor. Yeah. I'm glad you went here. I think this is probably
Are you really glad I went there?
No, I really am. I really am. I think this is an area that hasn't been discussed today, right? We talked about IPO readiness, but we haven't spoken about audit readiness, right? And we have talked about life cycles. We have talked about the startups. We have talked about the small finance teams, right? But we have a lot of hard, difficult conversations with prospective clients who come to us and say, hey, my bank needs an audit, or I need an audit for this, or I need an audit report for that. And there's a few, I won't say deal breakers, but let's just use that term for the day, deal breakers, right? That'll say, look, you're not at a level, you're not ready for an audit, right? You have no idea what you're getting yourself into. One of the deal killers is the shoebox, right? You have to have some semblance of accounting maturity, right? Accounting records, detailed data, in order for us to audit it. Right? I think I've got one of my advisory folks here today who he spends a lot of his time helping crypto native companies get ready for that, building financial statements from data years past before the auditors can come in and say, okay, now we're in a position that we can audit. Another deal killer is not understanding the regulatory environment that you are subject to. One of the questions we'll have for you is, well, you need to register with XYZ state, or how about that? What regulations are you subject to? What have you done to get comfortable about the regulations you're subject to? And many times they'll say, well, we think we're probably this, and that doesn't work for us.
Let me interject on that, Sean, and Mary, I want you to weigh in on that. There is not going to be a shortage of potential clients that walk in the door and may not understand or recognize the regulatory burden they may have. What do you say to them when they don't know? Mary, what are your thoughts?
Yeah,
find a lawyer.
Find a lawyer. Find a tax lawyer. It is pulling back, talking to your consultants, talking to your lawyers, getting your legal team involved. I think even more than a traditional company in a crypto or a Web3 company, having your support functions like finance and legal be involved in the products, in the building of the product, is imperative. I mean, at OpenSea, we were facing all sorts of tax issues with royalties and the token, what token we have, and stable coins and international issues. And so we actually were some of the people that said, we need an audit. We know that is operation one, but we need 3 to X months to get ready for that. So during that time, we were implementing Bitwave. We were getting we were going back and dealing with historical transactions, both crypto and non-crypto related, just to get through it.
Yeah, I want to point out for the audience, we thought we'd be ending up early. We're not. We've only got a couple of minutes left. But let's kind of bring this all home. Sean, let me start with you, and then Mary will come to you. For the practitioner facing this future of much more crypto activity in the world, what are the practical takeaways for them? What are the actionable things that practitioners need to be able to do and understand to be able to cater to customers in this space in the future?
So I'm not going to answer your question. I'm going to answer my own question, which is related to your question. But I think we need to, I'm going to spin it back to our preparers, right? Our preparers, folks like Mary and others in the room, they need practitioners who understand the space, right? I think Mary and I, you and I were talking earlier, some people don't understand the Lightning Network. They don't understand what you do. So when you're looking for an auditor, there's a lot of collaboration between the two parties. We need to understand each other because I need to know the risks, right? I'm opining on your financial statements, and I need to know what could go wrong. What's the risk environment, and what's the control environment? But if I don't understand your business, I can't audit you. So for folks who are looking for an audit or are struggling to find an auditor, maybe Mary, you can hum a few bars here, but it's like knowing, it's talking, it's education.
Yeah, it's keeping the open dialogue. To your earlier point on, do you have the licenses in place? It's even, do you need the licenses in place? So educating your auditor on why you are not a money transmitter or why you are a money transmitter and how you've dealt with that. Do you custody? How do you custody? What are your access controls? That was a big one for us, is making sure that we had them documented. You access, given that the Lightning Network is not a blockchain, it's a payment network built using Bitcoin technology, which Austin will teach us all about in a moment. It's different. So you access macaroons. So what are your segregation of duties? That was a really big one as we were going through the risk, the client acceptance and the risk approach. What is our segregation of duties? What's our access and change management controls? And then general education on whatever chain. Like I think layer 2s are another good example, or foundations. And what are they doing? What is their business model? How do they earn revenue? How do they pay expenses? These are all things that you have to hit on early. Make sure you're on the same page about.
Mary, Sean, we're just about out of time. Thank you both. It's always a great conversation. I'm going to end us off with one word, Bitwave. That's $20. Thank you, everyone, for listening.
Oh, man. You guys, take it easy on us. These checks are right.